What's going on? What's going on? Welcome to Cosmic Training Academy. I'm your host, Mr. Cosmic, in the building. 5 years trading strong. We here to show you what time it is and show you about our trading strategy. If you're new here, welcome, and I hope that I can show you guys something new about trading. Keep in mind, this is not trading advice, but however you hopefully you can learn something from me, and you can leave a comment and I can learn something from you. I'm here to help. I hope you're here to help me. Like and subscribe if you like this kind of content. Okay, check it out. This is a two portfolio setup. I'm trying to build this portfolio up to 5K and beyond. Right now it's at 762. Come on the journey with me. Let's see how high we can get that account. So right now, this one is cool. I'm going to do what they basically, to give you a background, everything on these portfolios is ETFs. ETFs are basically um, um, funds that have lots of different stocks inside of a basket. Basically, that's what it is. The great thing about ETFs, what's the benefit? The benefit of ETFs is number one, you're hedging against the market because there's so many different types of stocks. You might have in an ETF, it comes in sectors. So let's just say we're talking about the tech sector. You might have Microsoft, you might have Tesla, you might have different companies all inside that are part of the tech sector. So therefore, you don't have to just buy a Tesla, or you don't just have to buy a Microsoft, or you don't just have to buy a Google or a Alphabet. You don't just have to buy some Uber. Basically, you can buy what ETF that has all of those in there. But let me tell you part two that makes it good. The second thing that's great about an ETF is they pay dividends. All the other ones may not pay a dividend on the individual stocks, but an ETF does. Can you dig that? Okay, so um, let's just show you what's going on here. You can see the combined account amount. Um, let's go over. Let's go check a portfolio out, and hopefully, I don't. Hopefully, all the problems I've been having in the past trying to get this whole system working right. Hopefully, I've solved the problem. Okay, so in this one, well, this is a Roth account. And you can see, for example, I think I showed in the previous video, this is SDIV. I sold a call on here. I am working on a wheel strategy to build this portfolio up. Now, keep in mind, if you're new to options, man, you've got to learn it from the bottom up. Don't let, I mean, you could have a mentor, you could skip the process and everything, but let me tell you something. There's nothing like knowing the entire process, okay? So basically, what I'm doing here is I sold calls. What did I sell the calls at? I sold the calls at approximately $15, which gave me 14.34. Don't mind the minus there. I don't know why they do that, but anyway, they paid me $14, $15 for the for the privilege of having control of my 100 shares. Where are my 100 shares? Down here. You see that? That's 100 shares of SDIV that I own. So I'm sold calls for 15. When does it expire? It expires October 21st. So for about a month and some change, they have control of my SDIV for, let me see here. Um, yeah, for about a month and a half, they have control of SDIV. But guess what? What am I selling them for? $9. Why am I selling for $9? Because I paid cost per share $8.85. So that means I'm going to sell them for 15 cents more for 100 shares. What does that mean? 15 cents plus 100 equals $15. Okay, so even if they buy them from me or take them from me or they exercise that call option, I will get $15 plus the price that I was paid already. I get to keep my premium, which they paid me already, which was $15, and I also get to keep the other 15 that they're gonna pay me for $9. The difference between $9 and 8.85. Can you dig that? Okay. So that's money on top of money. Not big money because we're getting rich slow, man. We getting rich slow. Can y'all dig that? Okay. Okay, what is going on, guys? So let's just see what's next. Okay, so just to give you step by step how it goes is if you're doing what I'm doing right now, which is called I'm implementing the wheel strategy. After 5 years, I finally got to the understanding, and I have a sort of a sizable enough account. Really not really big enough. Honestly, you should probably have about 10 grand, but I got about seven. So let's just say I have enough to start the wheel strategy right now. So right. So anyway, what I want to do is sell put. I want to sell a put. That's how you get into the situation. That's how you get it. That's your first move. Number one, you sell a put, you get paid a premium. You get paid a premium because you're obligated to take 100 shares if you get exercised. For example, the next thing I think I'll probably do is let's see. See, I have 83 of these. If I have 100, I can sell calls, get a premium, and then put the price to let it go higher than the price I got it for. Okay, so here you go. Right now, REM cost me 27.90 cents. Right now it's 27.73. So not really going in my favor. You can tell it's not going in my favor because you see it. Total gain is almost $15 negative, right? Okay, no problem. What I'm going to do is I'm going to sell a call. And just to give you guys an example, I'm going to show you how we do that. REM. And at the same time, we eat some cheeses. Okay, let's view REM details. If they let us see it. Well, this is working better than my other one. So now here's the REM chart. A couple things you can see on the REM chart right away is the dividends. See what it pays out. 20 cents there, the $1.14 there, March 24, 15 cents, um, June 65 cents. So you see, you hold on REM, you keep on getting paid every couple months, right? March, April, May, June. So 3 months, every quarterly, they're paying out dividends. That's one great benefit on that. So you got to think about that. That's per share. You got 100 shares of that. That's money coming in. So the $15, yeah. Am I sweating it? Not really. But okay. But also remember, it's something that you want to hold. One cool thing about REM for me is that it's a real estate ETF. So it kind of, instead of like a lot of people going out here buying, flipping, and doing all this stuff with real estate, why do I have to do that? I don't waste my time with it no more, man. I used to be I'm a real estate licensed real estate agent, all that stuff, man. But at the same time, why do I have to go and take on the headaches of mortgages and all of that stuff when I could just invest in a real estate REIT or a real estate ETF and let somebody else do all that work? And then I reap the benefits. If you got 10,000 to put on the real estate, then why not put it into a real estate trust that pays you out a dividend every three months? But hey, that's a matter of opinion. That's up to you. You could make $30,000 in a deal. I used to make about $30,000 every deal, but you know, I had headaches. This, I don't have no headaches. That's somebody else's headache. My thing is just to watch the shares. So again, that's how you do that. Now let's go to the next stage. Let's look at the option chain. That's doon 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 doon. That's where all the money is at. Okay. So now we can see what the option chain does. REM option chain. Okay, we're only looking at calls because that's what I'm doing right now. I got 85 of these, 83 or something. Eventually, I'm about to start selling calls. Okay, if I didn't have any, I'd sell a put so that they can be put to me. And so right now, since I have 83, in about 18 more, 17 more, I'm gonna be able to sell calls. So that's what I'm probably gonna do since I have so many. And so what would I do? Let's see. Remember, what did I buy them at? I bought these at like 27, more than something around 27, 20. I forgot what the number was. But anyway, yeah, let's just say I'm selling them at 29. If I sell them at 29 to somebody else, if I want to get paid every week, let's see. Actually, this would be October 21st. Let's go back. Let's see how soon. Oh, we can do September 16th day. That's 11 days to expiration, right? So that means in 11 days, whatever this number is, I will get that. If, well, I'll get a period, but also if that, if it doesn't, whether they take the shares from me or whether they don't, I still get paid this number because I'm going to be selling. And I want you to remember, bid means sell, ask means buy. Okay, bid means sell, ask means buy. Remember that. Bid, sell, ask, buy. Okay? Remember, sell is when you is a put. Call is bearish, right? Okay? Anyway, so I paid, let's just say 28. Let's just say I'm gonna sell it for $29 because maybe I don't want my call. Maybe I don't want my shares to go no sooner than $29 because I paid 28 whatever change for it. So in other words, they're gonna pay me $20 to get into that contract. If it reaches 29, they're gonna get it from me. That means I make the difference between the price that I paid for it and the $29 plus the 20 cents. I know this gets confusing because it's 20 cents, but remember, everything in options is 100 shares per contract. So one contract equals 100 shares. In options, everything you're doing is 100 shares. Every time you place a contract, that's 100 shares. So don't be crazy and run off and say, I'm doing 9 contracts of that. If I did 5 contracts of this right here, number one, I better have 500 shares or enough to pay for 500 shares. If I did 6 contracts at $29, I better have enough to pay $29 for 600 shares. Do you understand that? Y'all get that? Man, hit me down in the comment section, man. If y'all get that, if you understand where I'm coming from. Um, so the question is, what would I be willing to let my shares go for? I got 83 now, and by the end of this week, I'll have 100. What would I be willing to let mine go? I won't know until I have 100 and I look at the average cost of all of my shares. Then I'll let you know what I'm letting it go, and I'll make another video showing what I'm placing that sell option for. But anyway, let's just say hypothetically right now I'm letting them go for 29. So right here, 29, I get paid $20 up front no matter what. This is expiring September the was September the 11th, I think it said it was. So this is how it rolls. Let me move this out the way. I don't know if it did. Oh, it let me move it. Okay, great. Okay. So I actually can get 25. That's one thing about here. Be careful. Right now, that's the bid price, but you could actually probably get it for right here. Always click on the price because I can get it for 25 actually right now. But the market's closed right now, but we ain't worried about it. I'm just saying, click on the price. Be careful. Don't click on bid. Click on the price right here. Okay. Because that means you'll get paid. That difference is that's $5. The difference. Hey man, every $5 add up. I don't care what you say. But anyway, so that's that. September 16th is when this contract expires. I'm selling a call. The reason why you know I'm selling because it's negative. That means I'm letting it go. I'm letting it go. It's leaving me. So, but for leaving me, I get paid. I get paid what? I get paid $20, $25 to be exact, to sell this contract. How many contracts? One contract. What is the position going to do? I'm going to sell. I'm going to sell one contract to open this deal, to start this deal off, right? Okay, cool. So, and what's the price? I wouldn't do it at that. I would do it at 25, right? Okay, or you could just click on this right here and it'll make it 25 off the top. How long do you want to leave this open? Obviously, if I'm doing a deal like this or I'm opening up contracts, when it comes down to options, I need to know where it's at right now because I'm not taking. I mean, of course, I could set it. Well, how do you set it? You put a limit on it. What is the limit? A limit means that that's where you want to make the deal, the price that you want to make the deal at, no matter what. I mean, in other words, it has to be at that price in order for this transaction to actually take place. Okay. All right. How long do you want to keep this option open through the broker? You could either put it for the day or you could put it until you want to cancel it. That's what GTC stand for. Good till canceled, right? Okay. So after that, you got any special instructions? None. I don't have any special instructions. Okay. So, and that's how that deal will go. So basically, I'll be getting paid $20 to sell 100 shares at a limit price of 27.98. You dig? Okay. So, but we ain't gonna do that right now. So I just want to show you guys an example of how that works. Okay. So, if you guys got any questions, the next, remember I told you I got 83 shares. I'm going to be looking to try to buy them as close to this $24 mark as possible because I see that over 1 year, that in the last year, matter of fact, since June 17, 2022, REM has dropped to $24. So it's safe for me to assume that we're in a falling market, declining market. What does that mean? That means that the probability that this is going to go from 27.73 at some point probably could easily hit $24. I'm buying into the crash. So I'm not going to turn around on Tuesday and buy all the last 17 shares. Why would I do that? It's going to affect my average of how much I paid per share. Can you dig that? So what I'm going to do is I'm going to buy into the fall. I'm going to buy into it. Why? Because that will change my average and make the average cost per share less expensive for me, which means that when I go to sell a call, that I can sell the call for and make more money because the cost to me for 100 shares of REM will end up being cheaper the farther I let this drop down and buy it cheaper. Ideally, I'm getting it at, I would love to get it at $24. Period. Why? You can't just come up with a number. You got to see what the market says. The market says that REM will hit $24. It will hit that. So if you can get it, the closer you can get to $24, the best deal you can make. And we know that for the last year that it's been that's the low for the year, and it's falling. So the probability is at some point in time it's probably going to hit 24. When it does, come back to this video and leave me a comment. Say, yo, Mr. Cosby, you were right. Man, it hit 24. I don't know if it's going to hit 24. Nobody knows what the hell the market's going to do. Don't let nobody sit up here and tell you they do. They're lying. But we've seen it hit before. What I like it to see is two touches. Two touches mean it's gone. Usually, as a rule of thumb, that's what they say. But anyway, so yeah, guys, so that's what we're planning to do come Tuesday, September the 6th of 2022, and we'll see how the market treats us. And if we can get REM at a cheaper price, we're gonna buy it. and then we're gonna buy into it. We'll probably buy 10 shares. It's 27 as of right now. You can get it at 20, 26. I'll probably put in a buy order at 26. So to buy some, maybe 10 at 26, and then I'll buy the rest. I'll put in a limit order to purchase the rest of it that will give me exactly 100, somewhere around $24.89 maybe. $24 or $25.50, somewhere around here, at least here or below. So, okay, guys. Well, hey, listen, I'm going to let you guys go, man. I'm not going to hold you up. We're almost 20 minutes in. I'm Mr. Cosmic. This is Cosmic Training Academy, where we trade, travel, and train. And we're working on a wheel strategy. We're selling options, man. We're doing everything, man. I love to hear your guys' comments. I love to be a better trader, man. Anything that you guys can tell me to make me be a trader, and anything that I can do to help you become a better trader, hey, leave a comment below. Saying like and subscribe if you like this kind of material. Mr. Cosmic Training Academy. I'm out. I'll see you on the next video. Okay, man. Peace.